Hey, and welcome back. This week, we're going to get into a number of key items, including, of course, the inflation rate that just dropped to a 20-month low. From there, we're going to dissect a little bit more about the federal budget because they have essentially mandated further protections for homeowners. This is quite interesting and definitely want to read into this one a bit. We're going to look at the overall national home prices because they did something they haven't done in a year and wrap it up with a little bit of a more micro look here into what GVRD is doing in the month of April. And will we see prices tick up for a third month in a row, officially making it a trend? So thanks as always for tuning in. And while the market is moving quickly and shifting dramatically, you may be wondering what that means for you. Is it the right time to buy? Should I be selling? Is tight inventory a good thing or bad thing for me? Either way, just reach out to us at any of the means below. We'd love to have a chat with you and see how we can help. So right off the top, we are going to get into inflation. And Ryan, why don't you take it away?
Yeah, got some good news for inflation. Down to 4.3% in March, as per the latest Consumer Price Index report released on Tuesday. That is down from 5.2% the month before. So, definitely trending in the right direction. In fact, I was quite surprised to see it drop as big as it did, considering we had such a significant drop from the last print. So, with that being said, we did see higher mortgage interest costs that were offset by lower energy prices. I think this really helps make the case that inflation is still on its trajectory for a 3% sort of target by the middle of the year here, barring any kind of unforeseen circumstances. Looking here, the core inflation too, that's the one that the central bank typically looks at, which takes the parts of the basket that are volatile out of it. And that trended downward in March as well. With that said, some of the important notes that we saw from the print were that while 3% seems to be coming up fairly quickly, the battle from 3% down to 2% is likely going to take a while. In fact, the Bank of Canada doesn't seem to think it's going to get to its 2% inflation target until the end of 2024. So we'll see. I find that quite staggering, considering we went from 8.1% down to where we are even now at 4.3% in just over a year. So fairly significant steam coming out of the inflation print, with prices still rising, but rising by less and less. I think where it's going to get a little bit more difficult here, the sticky part of the inflation, which is in the actual goods and services costs, that part seems to be the most difficult part to deal with. I mean, we are still paying an atrocious amount of money for our groceries and things like that. So, depending on what economists you follow, Doug Porter with BMO, for example, believes that while the vast majority of inflation seems to be coming down, prices yet haven't moved. And it's more like prices are here to stay for some time until we get to that 2% target where we will start to see prices come off. One of the biggest pieces of cost in the last print were actually mortgage interest rates cost. That actually was up 26.4% from this time last year. Now, we are seeing some significant changes from this time last year. This time last year, mortgage interest rate costs were on the way up. So it's not really a big surprise there. With that said, energy prices are down. Services, they're on their way down, and shelter is down. Down to 5.4% now. So it was 7.6% by comparison in 2022. So we're starting to really see at least some relief. It's trending the right way. And I think barring any unforeseen circumstances, we will hit that 3% target by the middle of the year. Again, Dan, whether we get to 2% and when that happens is, I think, a different conversation.
Very true. And obviously, we're seeing Canada emulate the States where they just dropped down a full percent in their last inflation print. So to see Canada do 0.9 essentially within the same month, they're both trending in a downward manner, even more aggressively than they were over the last few months here. So yeah, shockingly, or not so shockingly, 3% by summer does seem completely plausible at this point.
And I think, Dan, just before you go on to your next point, it does kind of build a case that Canada could end up in a bit of a softer landing than maybe we had anticipated. But again, maybe another conversation.
Yeah, and again, it's a touchy subject because softer landing for who, in a sense, right?
Fair enough.
If you bought a detached home in the Fraser Valley at the peak, it doesn't feel very soft right now.
No, completely
you're
agree
down
with
$400K.
you. Completely agree. Yeah.
But yeah, seeing that mortgage interest cost being at such a high rate, obviously not surprising, but a lot of people are very stressed or maxed out with their variable rate mortgages if they had bought, let's say, at the peak pricing at the bottom rates, and now they're seeing something very differently. Well, as we know, the banks have been helping these people out in the manner that they're keeping them in their homes by letting them extend amortizations, keeping their payments relatively the same. Whatever they're doing, they would much rather have people in their homes paying their mortgages than, of course, putting that house on the market, foreclosing on someone, etc. And it also reminds me, of course, of when they did the mortgage deferral option. When COVID first hit, the banks were very quick to enact that and allow people to feel comfort in their home if they had just lost their job or just had so much uncertainty that they felt a little bit more certain, knowing, okay, I don't have to worry about my mortgage for 6 months. Things are going to be okay. And they could focus on other means of income or whatever they had to do to move forward here. And this leads me to something that has come up in the federal budget here. And they've basically, they're aiming to codify assistance for distressed mortgage borrowers. These are new guidelines that are proposed by the Financial Consumer Agency of Canada. And forgive me, but I'm just going to read this one part verbatim here, where they state, elevated interest rates have made it harder for some Canadians to make their mortgage payments, particularly for those with variable rate mortgages. Canadians have the right to work with their mortgage lender to explore mortgage relief options that will help them stay in their homes. So specifically here, the government is taking steps to protect Canadian homeowners and and ensure that banks are providing Canadians with fair and equitable access to relief measures, which include things like extending the amortizations, adjusting payment schedules. So that to me sounds like some deferrals are potentially an option, or authorizing lump sum payments. Now, to be honest here, this isn't really anything new. This is already happening by the lenders, but the fact that this is essentially signaling that the regulators and policymakers are going to, in essence, push it through is almost a mandate here and do everything they can to soften the blow and to keep Canadians in their houses. And this is something we've been talking about for some time. Canada protects homeowners. Canada protects their banks. And in the States, of course, they protect their banks and quite often their the stock market, essentially. So this just further shows that while I don't think our Canadian government here does a very good job at helping people get into homes, once you're in your home, the government is protecting the crap out of you. That's my personal opinion. We're kind of seeing it, again, being mandated here because the opposite of people being protected to stay in their homes, to find ways to, for lack of a better term, sometimes kick that can further down the road. Love it or hate it, the government's protecting housing, and here's yet another sign of just that.
I think it also, in many ways, I mean, I think seeing the contagion of the banks, what took place down in the States, I think this is a bit of a way of maybe the government protecting banks just as much too. I mean, at the end of the day, giving them the leeway and the flexibility to work with their customers in a way that they need to, just so much so that, we don't see bank runs and things like we saw in the States happening up here. Right.
Yeah, so. Exactly. So I think if you're listening or you're watching this and you are having problems or lots of stress, you're paying that mortgage, go and talk to your bank. Okay. There are options for you. So have that discussion and there should be some relief there and they're going to help you stay in your home and find a way to make it affordable as much as they can. So please do.
Yeah. And very interesting note, just to shift gears a little bit here. Looking across Canada, because home prices in Canada actually for the first time in maybe, I think it was over a year, home prices actually have ticked higher. I mean, it was a very modest 0.2% month over month increase in the national home prices, but it's the first time that that's happened in some time. Again, I think this is just, reading anecdotal stories, Dan, of both sellers in Toronto and sellers in Vancouver who had maybe bought pre-sales in the past. They were considering walking away from their properties and maybe were fire selling them. Instead, they're choosing to complete on them, and with the understanding that historically speaking, these home price dips have been in the months, not in the years of duration. So people are stomaching, if you will, a year loss or maybe 2 years of losses to recover, maybe in the fourth and the fifth year and get out unscathed. So it's interesting decision making going on here. I think, again, like you just said, the Canadian government really does try and protect homeowners, and history has shown us that. And so I think investors are now starting to see, well, maybe I'll close on this, even if it does cost me a little bit more money right now. And in the next 2 or 3 years, I'll refinance and then potentially sell the home. So it is possible we'll see some more inventory in 2 to 3 years.
Yeah, and let's keep in mind too, this metric is essentially the HPI, which is realistically, it's a lagging indicator, and it typically lags about 3 months. So I think it's pretty safe to say that home prices nationally were truly increasing starting back in about January. But it's just now showing up in the HPI. And of course, we saw that and share that information locally here about the GVRD market back in January, February as well. So then let's see where we are. So what's happening here in GVRD, and what can you expect to hear when the dust settles here for the April numbers? Well, we currently, right now, this is Friday at 4:20 p.m., we are just over 9,000 listings right now. And it's the first time we've seen more than 9,000 active listings in 4 months. We don't know if that's where it's going to wash out. It jumped up to about 9,150 for an hour or two there, but it's now about 9,050 because the appetite is pretty ferocious right now. And we are seeing, of course, sales ticking up. About 2,700 units will sell by the end of this month. Last month, it was 3,200. So we're 18% off of last year's April. But last year, of course, was starting to be that downward market. And here we are in an upward market. So different feeling on the ground, of course, but we are seeing inventory trying to tick up. So we're going to see quite a few new listings this month, but the active inventory just cresting 9,000 for the first time in 4 months. Let's hope it stays there and continues to rise and maybe alleviate some of the pressures that are out there right now. When it comes to prices, well, first, let's look at the average price. It's up, but only marginally. It's only up about 2,000 right now. Again, we still have almost 10 days left in the month, so we'll see where it washes out. But right now, up about 2,000, with the median up 6,000. 956,000 is the median, and average, I don't think I even mentioned the price, but 1,270,000. What does this mean ultimately? And knowing that we've seen 4 months in uptick in both median and average, HPI will go up again in April, making it 3 months in a row. Officially, in a sense, if you look at 3 months being a trend, we are officially in an upward trend. I think the rate of the upward trend is slowing, but up is up. And that is basically what you can expect to hear by the time the April numbers come out in about 10, 12 days here.
Yeah, Dan, would you say, just anecdotally, how many offers have we made this month where we have been competing for property?
80% of them, I'd say.
Yeah, I'd say you're about right.
Yeah, it's you look at the listings out there now, and it feels like, at least the ones I've seen this week, about 50%, one of every two, have the seller holding off on offer date, meaning they expect it to receive more than one offer, and they realistically expect it to go at or over the list price.
Yeah, I was at a open house on the weekend, and I mean the home to some degree was definitely underlisted in terms of its value, but they must have had 40 people there at 2:00 on the Saturday waiting to get in. Right, this is single family detached in East Vancouver without any lane access. Not a great home by any stretch, right? So we're definitely seeing it on the ground. But like you said, Dan, I think there has been a few recent sort of instances where we were expecting to see some property get a ton of attention, and then it didn't too. So some areas of the market are still spotty. I think it comes down to how you're pricing your property, and the strategy by which you choose, I think, is very important right now.
Forever an interesting market. And if it's something that you're considering buying or selling in, of course, reach out to your professional and make sure you get some advice, because things move quick here and you have to be on the pulse to maximize that sale or that purchase. So thanks as always for tuning in, and we will be here again next week.